Hey, what's up, guys? Welcome back to the channel. My name is Earl Leatham, and I'm a finance professional with over 10 years of experience in banking, mortgages, real estate sales, and investing. If this is your first time checking out the channel, please consider subscribing to the channel and hit that notification bell so you're notified every time we upload a new video here. Now, on recent videos, I talked about how to go about building and repairing credit. And I can remember when I was 18 years old, I already understood the importance of establishing credit. So I started to apply for credit cards at major credit card companies, even at banks where I banked at, but no one would approve me for a credit card. Until one credit card company took a chance on this broke college kid with no job and no credit history and issued me a credit card with a 300 credit limit. Man, I was so excited, because I was finally about to start my journey of building and establishing credit for the first time. Now, fast forward years later, I have demonstrated my ability to handle and manage credit cards and multiple other trade lines responsibly. And now the same credit card companies and the same banks that denied me once upon a time are constantly sending me offers with the best offers and the best rates. So I say that to say that while the journey of starting to build your credit might be a little challenging, because it'll be hard to find someone who's willing to give you an opportunity, in the long run, it's going to serve you very, very well. So today, I want to talk about the best credit cards for beginners, and also some of the features that you should be looking for when you're shopping around, and the common pitfalls to avoid. Now, it's very important that when you're looking to apply for your first credit card, that you first shop around and see what's out there. Really understand the differences between all the credit cards, because not all credit cards are created the same. So before you start applying, here are some of the features that you want to look for when looking up potential credit card companies to apply for. The first thing you want to look at is make sure that the card that you're applying for does not have an annual fee. While there's many cards that do charge an annual fee just for having the card, there's plenty of options out there that does not charge an annual fee. And especially if you're opening 2 and 3 different credit cards, you don't want to be paying an annual fee in each and every one of those cards, because chances are you won't be utilizing all of those cards and you won't be taking advantage of the benefits and the perks that makes that annual fee worth it. So when you're starting out, make sure that you're applying only for credit cards that does not carry an annual fee. There's still a lot of options out there that offers a lot of great benefits nonetheless. The second thing you want to look out for is try to find a credit card that offers a 0% introductory rate for at least 12 to 24 months. The reason why this is so great is that these credit cards allow you to pretty much make purchases, carry a balance month over month, and they don't charge you a single dollar of interest for the amount of period of time that the introductory promotion is good for. So like I said, it could be 12 months, 18 months, sometimes even 24 months, where you can have a balance, carry that balance month over month, and then pay it off whenever you like. But as long as it's paid off in full before that time is up, then you won't be charged a single dollar of interest. Now, I'm not one to encourage individuals to carry a balance month over month. Personally, I like to pay all my credit cards off every single month so that I'm ensuring that I never pay a single dollar in interest. But these credit cards that carries the introductory promotional rate of 0% are great if you have major purchases to make. Or maybe if you're starting a business and you need some upfront funds to kind of get your business off the ground, and you need a little bit of time before you start generating money, this is a good tool to use to get started, and you don't have to worry about paying a single dollar of interest. But just remember to make sure you pay that balance off in full before the introductory term expires, because you will be paying interest on that balance if it's still there by the time the introductory period has ended. The next thing you want to look for on any credit card, if you're going to be spending that card or you're utilizing that card to make purchases, then you might as well earn money back. So you want to look for cards that carries a cashback or a rewards point system. These cards, like I mentioned, when you make purchases, especially in certain categories, sometimes you can earn 1, 2, 3, sometimes even 4 and 5% back just for making that purchase that you were going to make anyways. So definitely look for cards that does offer some cash back or reward points that you can then turn in for either cash or even, travel or whatever the case may be. A lot of these cards also offer introductory cash or reward point bonus for you spending a certain amount of dollars within a short period of time. Now, again, guys, these credit card companies are smart. This is to entice you to spend money in a short period of time. And the hope for them is that you won't pay off the full balance before that period is up. And then they will start to charge you interest on that balance. So don't get caught into the trap. But again, if you know you have a big purchase coming up, say you have to purchase some furniture for $5,000, and this credit card offers maybe a $500 cashback bonus after you spend the first $5,000, then you're going to make that purchase anyways. So you can utilize that card, pay for your furniture, $5,000, but have a plan in place to make sure you pay that balance off in full before that intro period is up, so you don't pay a single dollar in interest and you just got an extra $500 that off of the $5,000 you were going to spend anyways. Right? Makes sense? And then the last feature you want to make sure you keep an eye out for is for us travelers, make sure the card does not charge a foreign transaction fee. There's a lot of cards that do charge a foreign transaction fee. So anytime you use that card with a merchant that's located outside of the United States of America, they will charge you a fee for utilizing that card. However, there's a lot of cards out there that does not charge you a foreign transaction fee. So keep an eye out for that when you're shopping around for credit cards. So those are just a few features that I personally look for when I'm shopping around for credit cards and deciding if I want to apply to that specific company. Now, let's talk about some of the common pitfalls that you should be avoiding when starting your journey of building credit utilizing credit cards. So the first common pitfall that I want you to make sure that you avoid is, I kind of touched on it a little earlier, and that's carrying a balance past that introductory period that they initially offered you when you was applied and approved for that credit card. So like I mentioned, sometimes they may offer 12, 18, sometimes even 24 months of 0% intro rate for any purchases that you make with that credit card. But the whole reason why they offer you this, guys, is that they want you to rack up a balance and get very comfortable with not paying that balance off every month. So by the time the intro period is up, they want that balance to still exist so they can start charging you interest on that balance. So do not get caught into that trap. Make sure you're still utilizing those credit cards as responsible as possible. This is not your money. This is the bank's money. So treat it as such. Make sure you always have a plan in place for how you're going to pay that balance off when you start to utilize that credit card. The second pitfall to avoid is carrying a balance above 30% of the total credit limit available to you. In a previous video, I mentioned the importance of low credit utilization and the impact that it has on your overall credit score. So if you're constantly carrying a balance that is greater than 30% of the total credit limit available to you, the credit bureaus are going to look at you as an irresponsible credit user, and your credit score will be negatively impacted as a result of that. So, like I mentioned earlier, I'm a proponent of paying off your credit cards every single month because I want to utilize the bank's money and don't pay them a single dollar of interest. But I have to admit, sometimes it is unavoidable to carry that balance over every single month. If you may have had an emergency come up and you had to utilize a credit card to make some purchases or, feed your family, whatever the case may be, because maybe you lost a job or whatever the case may be. In those instances, you just want to make sure that you do not carry more than 30% of the total credit limit available to you so that your credit score is not negatively impacted as a result. The next pitfall that you need to avoid is paying the minimum payment on a credit card. Now, again, if you're already in a situation where you're drowning in debt and you don't necessarily have the income to be able to pay more on your credit cards every single month, and you just need to make the payments, the minimum payment on those credit cards just to avoid any negative late fees or things of that nature, then I completely understand. But if you're in control of your finances and you have the option to pay that credit card off in full, or at least pay a lot more than the minimum payment, do not just make the minimum payment on that credit card, because most of that money, first and foremost, is going to be going towards interest. And that's what the bank wants. That's how they make their money. They make the money off of the interest that you pay on these lines of credit. So make sure you're not paying just a minimum payment on these credit cards. It's going to take you a lot longer to pay that credit card off, and you're going to be paying a lot more in interest than you would have if you had just paid the balance faster. And the last pitfall that you need to avoid is closing out any active lines of credit or credit cards you have available. This is a common mistake, but there's two real big reasons why you should not do this. The first one is related to the credit utilization ratio. Remember, earlier in this video, I talked about not using more than 30% of the total credit limit available to you. The credit bureau calculates your credit utilization and determines if you are using your credit cards responsibly. So, if you close out any credit cards, that credit limit associated with that card will not be included in that credit utilization ratio, and therefore that ratio is going to increase. So if it was 30% before, now it's going to probably be 40, 50, or 60%, which will negatively impact your score. The second reason why you should never close out a credit card, especially your oldest trade lines, is because the credit bureaus calculate your average years of credit history using the length of time that you have each active trade line open. Because someone who opens and closes trade lines is someone who's viewed to not be using credit responsibly. But the individuals that hold on to their trade lines for a longer period of time are viewed to be stronger credit profiles. So therefore, you want to make sure you never close out, especially your oldest trade lines, because the longer period of time that you've had a trade line, the better your ratio, your average is going to be. Years ago, when I was 18 years old, the first company to give me a chance was Discover. That Discover card is still in my possession to this day. Not only does it have one of the largest credit limits of all my cards, but it's also my oldest trade line on my credit profile. So I'm never going to close that card, even though I don't use that card on a regular basis. I seldomly use that card unless I'm able to take advantage of the cash back in a select category on a major purchase. So you definitely want to avoid closing any credit cards, any active lines of credit. If you're not using it, if you paid it down to zero, just put it away, leave it at home, and keep that trade line open. So those are just some of the most common pitfalls that you definitely need to look out for. Now, the first credit card that is great for beginners is, like I mentioned earlier, Discover Bank. Discover card has plenty of options to choose from. But for our beginners, especially if you're a college student, they offer the Discover Student Card, which is a great card for a beginner. It offers a 5% cash back on select categories that changes every quarter. But better yet, it's a card that's easy to get because typically they don't require a large or even any income in order to be approved for that card. Another great option is the Capital One Quicksilver Card. This card carries no annual fee, and they typically offer 1.5x of reward points for every dollar that you spend. So this is a great card to use for everyday purchases, no specific categories. And like I mentioned, there's zero annual fee, so it doesn't cost you anything to have it. And typically, it's a card that they're willing to approve for individuals who have little to no credit. And then one of my favorite cards for beginners, and even one of my favorite cards to date, is the Bank of America Cash Reward Card. This card offers 1% on all purchases, 2% in groceries, and then 3% on several different categories that you can choose from every single month, such as gas, traveling, online shopping, etc. I love this card because of that 3% option, because you can change month over month which category you want to receive the 3% for. And sometimes if you're planning ahead and you already know, for instance, hey, this month I'm planning to purchase airline tickets or hotels or whatever the case may be, then I can switch it to travel and earn 3% on maybe $1,000 you spent on those airline tickets and hotels. So again, it's a great card and it's great for beginners, but overall I think it's just a great card to have in your possession. And then lastly, for individuals who might not be able to still get approved for unsecured credit cards because maybe they have bad credit, they didn't necessarily do the right things in the past, but they're trying to turn things around, then I urge you to look into a secured card. And some great companies that offers pretty decent secured cards are Discover, Capital One, and Citibank. So those are some of the best cards I think that are great for beginners. If you're starting your journey on building credit or you're trying to repair and reestablish your credit, definitely look into those companies and start applying for those credit cards. And again, lastly, I just want to urge you guys that the whole idea of obtaining a credit card is not to go out there and just use it frivolously. The whole point is to make sure that you're utilizing it responsibly. So if you're not disciplined enough, know yourself, if you're not disciplined, if you're not able to even manage a checking or a savings account as it is, then maybe postpone getting a credit card until you have developed the right habits in order to responsibly utilize it, because it's a great tool if used appropriately, but it can really get you in a lot of trouble if you're not responsible with using these credit cards. So that's all I want to talk about here today, guys. If you enjoyed this video, please don't hesitate. Go ahead and smash that like button. And like I mentioned earlier, if you're new to the channel, please consider subscribing to the channel and hit that notification bell. And let me know in the comments below what you thought about the video, and if there's any other questions that you'd like me to address here on the channel regarding credit or anything else under the sun. And lastly, if you think this video would be helpful to a friend or family member, please share this video with them as well. Thank you guys for tuning in. I love you guys. Take care. I'll talk to you again soon. Peace.